Good morning and welcome back to Morning Markets from True Potential. Today we're going to be looking at leading economic indicators that gives us a sense of the health of the US economy. Today we will be focusing on the survey data from US small businesses. Really important because they are the heartbeat of the US economy and gives us a sense of what the future expectations are from smaller businesses. When we look at the headline level for the reading on Optimism, we saw a deterioration or continuation of the deterioration within small businesses as they become concerned about the future economic activity. But when we look at some of the subcomponents, particularly on the labour market front, it continues to paint a slightly different picture, a more optimistic picture when we look at the current level of job openings. Also, the job openings in 3 months' time continues to show that the labour market is actually quite strong. And that really corresponds with other data that we've been looking at over the last few months, where the ratio of vacancies to unemployed remains at 1.7, still very strong. So you've got 1.7 vacancies to every unemployed person within the US. Also in the survey, looking at the subcomponents, the actual employment rate continues to show a positive reading, the fourth positive reading in consecutive months. We haven't seen that since 2019. So it shows that whilst optimism is deteriorating and perhaps signalling concerns about recession, when we look at other components such as the labour market, it's still very healthy. Looking at credit conditions, this is important because of the issues that we've had within US regional banks in March. There's concerns that banks will start to pull back on lending and make it more difficult. US small businesses are seeing it being at the margin slightly more difficult to get out new loans compared to before, but it's perhaps still too early to know the full extent. Inflation is still a big problem for US small businesses, and that sets us up well for today, where we'll get the latest US inflation report. Inflation is expected to continue to fall lower, from 6% down to 5.2% year on year. Remember, in June last year, inflation peaked at 9%. So we've come a long way and we expect this trend to continue, which will be a positive for both equities and bond markets. We'll also get the Fed minutes today. Really important to look for additional details on the path of inflation, interest rates, but also their take on the banking issues in the US and future credit conditions. So we'll keep you up to date through the course of this week, so please stay tuned.